Okay, so now we're going to focus on this to see how we know whether the accounts are debited or credited in there. So now we make a T journal for debtors control and then sales and cost of sales and trading stock. Okay, sorry my T account's a bit skew. But remember, on your left hand side in a T journal is always debit. And on your right hand side is always credit, okay? Now, you must first identify what type of account this is. I'll tell you now, debtors control is an asset. You will see in your classification of accounts. I'll send you a picture of it also. Debtors control is an asset. Sales is owner's equity. It's an income. No? And then cost of sales is also owner's equity, but it's an expense. The reason being is, remember, cost of sales is the price of the trading stock. It's the price now that you pay for the goods that you're going to sell again. It's a bit confusing now, but so say you sell goods to a business now, no? And then cost of sales is almost like when we sell goods to a business, when you sell goods, no? Cost of sales is the price you pay for that goods, no? And you're gonna resell it again, for example. So that's why it's expense, because you are paying out money, you're paying out for the goods, no? And then trading stock is an asset also, because that is cost of sales now is the amount you would pay for trading stock. Trading stock is what the stock you have, not all the, like say for example you're a chips business, your stock will be chips, no? And like that is it's assets that you have, but you're gonna resell it again. It's called trading stock. It's stock, but you're gonna resell it again. You're gonna trade it again, okay? So, but just remember the steps. Control is an asset. Sales is owner's equity. Cost of sales owner's equity, and this is asset. Okay, now I should know, no? For any T account, if it's an asset, okay, debit and credit side. If it's an asset, no, the increases are always by the debit side, and the decreases are by the credit side. So the increase is always first by an asset, okay. And if it was owner's equity, then it's the decreases first and then the increases. So then the decrease will be by the debit side and increase will be by the credit side. You should just remember that every asset now, because it's a value of the business now, or like increases the value of the business, remember that the increase will always be first by the debit side and the decrease always by the credit side. And any owner's equity, the decrease is by the debit side and the increase by the credit side. It's a bit confusing, but that's something you should remember. So because it's an asset, remember, the increases will always be by the debit side and decreases by the credit side. And if it's owner's equity, then the decreases first and then increases. And there we go. So the decreases first was owner's equity and then increases, and the same here. Because it's an asset, the increase is going to be by the debit side and the decrease by the credit side. Okay. So now, debtors control. Sold goods on credit to Mr. Greenwood, to M. Greenwood now. Okay, now let me explain something. So now, if goods are sold on credit, it increases debtors control. Debtors control is basically now, it's an asset for us. It's what someone else owes us still now. So like, we know if we sell it to someone, they're gonna have to owe us money. Like we have an advantage over that. Like we got something out of it. We must still get money from them. Okay. So if debtors in control, if you sell goods to people now on credit, which means you give it to them and they pay you back later, okay? If you sell goods to them on credit, and then the debtors control will increase. If I say, for example, I sell you goods now, 6,000 rand on credit, no? You must pay that 6,000 rand later, no? Then the debtors control account will increase. So basically, the more debt someone makes, the more it increases. So debt control is basically what the other person still owes you. No? And so you pay your debt back, and then the debt control will decrease. So if you take the more debt you take, the more the debt control will increase, because that's like how much you still owe me, the debt you owe me. I have control over you basically. But if you pay back your debt, like say for example, you owe me 1,000 rand, took 1,000 rand worth of goods now, no? And if you pay back, like say for example, the 500 rand, then your debts control will decrease by 500 rand. Basically, then you'll owe me another 500 rand left. If you still don't understand, I can explain it again. Just tell me, okay? Now, so debtors control, it will be an increase for the business. I'm gonna say we sold good on credit 6,000 rand. Now, So that's the debt control now. They owe us 6,000 rand debt basically. Yeah. So you must pay the 6,000 back. So by debt control, it will be by the increase side, okay? Because we owe us 6,000 rand now. And for sales, this will be on the increase side because credit sales is also a type of sale. It's just they pay you back later, but it's still sales. You're still getting money for the good you sold to them, okay? And then cost of sales. Remember, cost of sales, what you pay for the good. Here it's 3,000 rand. And cost of sales is always an expense for the business. And all expenses go to the decrease side, okay? So the 3,000 rand cost of sales there. Trading stock is always an increase for the business. No? So trading stock is also like the value of the goods that you're selling. So that 6,000 rand will go to the trading stock by the increase side. Oh wait, no. Sorry. Look here. We are selling goods to him now, meaning that we will have less stock now. You get what I mean? We're going to have less trading stock because we are selling it to him. So we're giving him more of what we have. And you see what I mean? Like say you have a chips business now, you have chips and you sold the chips to him. You will have less chips, of course, no? The trading stock. So that's why it will decrease and it will always be the amount of the cost of sales, okay? So now, because we're giving goods away, the trading stock will decrease. Do you get what I mean? No? Because now we're giving him 6,000 rands worth goods. But remember, cost of sales is the price we paid for trading stock. No? Don't forget that. So, yeah, we are giving a 3,000 rand worth of goods away. So, it will be by the decrease side here, by the trading stock. Because it's minusing from the trading stock, okay? And now we're going to see what account, the source document, credit sales invoice. Because every credit sale, now the source document for that is an invoice. So if people sell goods on credit, invoice is the document, okay? The journal in the DJ, the debtors journal. Now, you should know that because remember, the CRJ is cash receipts journal, that's for all cash sales. And the debtors journal is for all the debt sales, like when you sell people goods on credit, then it always go to the debtors journal, okay? That's why DJ is there. And then account debited. Let's see what account was debited. Can you see? Here, debtors control was debited. And that's why it's here by debited. Account credited. Can you see the sales are under credit? Sales are credited. So that's why that's account credited. Cost of sales is also debited there. Can you see that? And the trading stock is credited. Can you see? And that's how we got there. So, debtors control. On your assets, how much will it increase? Remember, we are going to get 6,000 rand from this person now. And remember, bank is also an asset, so our money will increase by 6,000. So, how will it affect your assets? The debtors control. It will affect your assets. It will increase it by 6,000. Okay. Owner's equity, the sales. Sales are also an increase for the business. How much sales did we get? How much worth? 6,000. So, by the sales account, sales, it will be plus 6,000 for owner's equity because it's under owner's equity. Can you see not debtors control? We're recording if it's an increase or decrease for the assets because debtors control is an asset. Remember that, no? Debtors control is an asset. Sales is owner's equity. That's why recording it under owner's equity. That's a plus 6,000 increase for owner's equity also. Because remember, sales, no? Or what we sell to other people and we get money for it. So it increases our owner's equity. Remember that. Our monetary value in the business, like the money in that. Cost of sales. Can you see here? Cost of sales is debited, no? So it's there. Trading stock is credited. As you can see here. It's under the credit side, no? Okay, so cost of sales. Now, do you think it will increase or decrease your assets? It will decrease it because remember, cost of sales is the money you pay for trading stock. And any money you pay out will decrease your asset or will decrease your money in the bank. Okay? So cost of sale decrease your assets by 3,000 rand. And trading stock also. The fact that you sold a 3,000 worth trading stock now will decrease it. But okay, now let's see like that. Cost of sales is owner's equity. So this you will think of owner's equity when you do cost of sales here now. No? But sorry, it was a bit confusing. But say cost of sales, that's owner's equity now. So do you think it will decrease or increase owner's equity? Remember, cost of sales is an expense. So it will decrease owner's equity by how much? by 3,000. Okay. Trading stock is an asset, but because we are selling the stock, remember we sold goods on credit to him. Cost sales of 3,000 rand. So trading stock was worth. That's what we bought this for, 3,000. Yeah. So which means we are losing a 3,000 rands worth of our assets, our trading stock. Because remember, trading stock is an asset, and that's how we got there. And the liabilities always say 0 and 0. And then, yeah, do you understand that though?